All right, everyone, good morning. The US market shed roughly 480 billion on Tuesday, closing at 86 trillion in total capitalization. That's a decline of 55 basis points on a weighted basis. Only two out of the election sectors finishes green. Utilities up 1.23%, energy up 86 basis points. On the other side of the tape, communication services took the deepest cut at 2.6%, dragged almost entirely by a single name called Alphabet. Consumer cyclicals raised 62 basis points, real estate slipped 87, and technology, despite being the largest sector by a wide margin, held up better than most at just 24 basis points negative. This was not a broad-based sell-off, it was a story about a handful of very large stocks. Good morning and welcome to August 11th, 2026. The US market finished lower today by about 0.5%. If you had to pick the story of the session in one word, it would be Alphabet. The Google parent shed more than 167 billion on its Class A shares alone, roughly a third of the entire market dollar loss on the day. That is a notable pattern to point out. The tape was down, yes, but this was not a broad-based sell-off. Most sectors were only fractionally lower. Energy and utilities actually finished green. What we had was a narrow day driven by an enormous story in mega cap. All right, let's look at the actual services, starting with technology. The biggest sector on the board at 27.6 trillion market cap. The group finishes down just 25 basis points, or about $66 billion. That is a relatively soft landing given the size of the sell-off and some of its constituents. The story of the sector was semiconductor equipment. KLA Corp jumped 4%, adding 10 billion on strong forecast Q4 earnings and a September quarter guide implying acceleration to 25 plus percent year over year. Lam Research advanced 1.6% for a 6 billion gain on a similar blowout quarter, and Applied Materials climbed 67 minutes ahead of its own earnings tomorrow. On the other side of the sector, Apple waited on the tape, down 1%, 50 billion market cap hit after Jefferies downgraded the stock to perform on a supply chain checks suggestion Apple has canceled its all-glass iPhone. The DRAM memory shortage that Tim Cook flagged on July 30th call keeps compressing margins. Turning to communications services. The story of the day, and not a happy one. The sector dropped 2.6%. 325 billion decline. Can you imagine that? And within that, internet content and information alone erased 315 billion. That's wild. With Alphabet doing nearly all of the damage. Both shares classes fell. Google down 3%, and the other Google also 3%. After the company closed a 25 billion senior note offering on top of an ongoing 40 billion ATM equity program. Investors are increasingly concerned about the ballooning 26 capex forecast, now 195 billion to 205 billion. A French antitrust complaint from around 300 publishers over AI overviews added regulatory overhang. Elsewhere in the sector, telecom services stood out as a bright spot. AT&T added 1.8%, Comcast ticked up 1.8%, Verizon edged higher by 50 basis points as investors rotated into steady, high dividend players. And AppLovin dropped nearly 6%, taking the advertising agencies industry down with it. Let's move to financials. I guess you can't really go back. There you go, financials. $2 trillion market cap for insurance. That's wild. Banks 2 trillion, credit services 1.7, capital markets 1.2. That's a lot of fucking money. And then you have banks going up by 1%, which is $24 billion. That's a lot of fucking money. But the sector on the surface looked flat, down just 0.0, pretty much flat. Under the hood, though, there was a real story. The asset management added 30 billion, which is not shown here, which is interesting. And on the day, and which is up 2.6%. Blackstone rallied almost 4%, or about 6.8 billion gain. KKR jumped 6.9%, or 6.4 billion. Apollo picked up 6%. The catalyst was Nvidia announced a memorandum of understanding on August 10th, naming 6 firms: BlackRock, Apollo, Blackstone, Brookfield, Goldman, and KKR, to build AI compute infrastructure financing platforms, mobilizing over $50 billion in third-party capital. On the flip side, insurance took the hit. Berkshire Hathaway alone dragged the sector with a B share of 2% down, or 25 billion loss, and A share of the same amount. Some of that is post-earnings profit taking, and some is mark-to-market drag by Berkshire's Apple and New Alphabet position. Whew. What are we seeing here in terms of asset management? That's all of them, pretty much flat. Interesting. All right, let's move to industrials. Or actually, now to the day's outliers, the day individual stocks that either drove the tape or stood far apart from their sector. The biggest dollar moves on the side. Meta Platforms did the heavy lifting. It added 10.8 billion on a 71 basis points gain after launching an open source AI model targeting at laptops. KLA Corp came in a close second at 10 billion on that 4% earning rally. Micron Technology 8%.